Can you guys hear me by chance?
Loud and clear, loud and clear. We'll go ahead and get started. We have a white crew in the room today. I know I've got some MSBA and MSM. What program are you from?
I'm a sophomore.
Awesome. Well, welcome. I'm really excited to have you here. What is your major? Do you know yet?
Finance.
Finance. So you're going to be in the business school very soon.
Yes, ma'am.
Very good, very good. Which program are you from?
I'm a freshman.
You're a freshman. We have a freshman and a sophomore in the room.
Yeah.
My head is exploding, and I know my boss is going to be super excited to know that our reach right is outside of Farrell Hall. So welcome. We've got one of our co-eds from MSM in the room as well. So it's a nice representation. Small but mighty, right, guys? And so these sessions are designed to do two things. The first thing is to educate you on potential career paths in financial services, right? Everybody automatically thinks banks. You may be very curious about investment banking. What is that really about? What is the difference between, private equity and private wealth management? All of the things, right? So I've assembled a crew of alums who are going to talk a little bit about what they do in financial services. And then the second reason that we like to have these sessions here is for you to expand your network, right? We get that all the time, that you always, you hear it from us. You need to network, you need to meet new people, you need to talk to as many people as you possibly can to try and figure out what could be next for you. So these sessions are designed to do just that, right? We just teed these really generous alums up for you to connect with after this session is over. Okay? So there was one person who there was one person who could not attend the panel. He had a conflict, and he I need for you guys to sign in for me. Welcome to the time. Anytime, you don't have to right now. Anytime. And that's his name is. I wanted to show you his LinkedIn profile in case you're really curious about spending some time with him. He's opened his calendar up to talk to any of our students if they have any, any curiosity about what it's like to get to Goldman Sachs. Like this guy had a very, he did a lot of different things before he was able to land this job as a private wealth advisor at Goldman Sachs. His name is Eli Everett, and he's sorry that he couldn't be on the panel today, but he has offered to spend time with anyone who might be curious about his trajectory to Goldman Sachs. And so, all right, what we're going to do is we're going to get started. I'm going to have the panelists introduce themselves. We were really curious about where you went to undergrad, what your major was, what program you did when you were here at Wake Forest, or programs, and where you currently are working and what your title is. So that should be plenty to start with. I'll then cue us up to go into a deeper dive of what you actually do at your respective firms. Does that sound good? Awesome. All right, Taylor, you're up in the upper left-hand corner, so I'm going to get you to go first. Mikey, you're next.
The very Brady Bunch setup, it looks like, with all these new squares. Good afternoon, everyone. My name is Taylor Grant Chabot, and I am currently at Ally Bank. I will be celebrating 6 years with Ally next February. I completed my undergraduate degree at the University of Oklahoma. I was a nonprofit management major. After some self-reflection, decided that wasn't the route that was right for me, so I completed the MSM program and graduated in 2016. I moved to Charlotte shortly after that, so I'm located in Charlotte, North Carolina now.
And what's your title there at Ally? Did you say?
I'm a manager in our financial crimes compliance group.
Very cool. All right, Mikey, and Nikki, you're next.
Awesome. Hey, everybody. Super happy to be talking with you all today. Wake has a special place in my heart, so it's cool to come back and be able to speak with everyone here. I'm from the Boston area originally. I was kind of like that little kid who was annoying and knew all the sports statistics and, was could name off any stat on SportsCenter. And so wasn't really sure what I wanted to do in undergrad. I went to UMass Lowell, where I studied math, was on a pre-actuarial track, and then kind of saw the opportunity to buff up some of my analytical skills and being able to translate my math knowledge and statistics into business value. And so I went and did the MSBA, got a Wake, graduated in 2022, and now I am at Liberty Mutual Insurance, where I work as a data analyst.
Back in Boston.
Yep, up in Boston.
Up in Boston. All right, Nikki, you're up, and we're going to hear from Jake after Nikki.
Hi everyone, my name is Nikki, and like Mikey, I also graduated from the MSBA program in 2022. Prior to that, I was at the University of Miami down in Florida, and I studied math and accounting, and I originally thought I was going to be an accountant, so I applied for the MSA program, and then like 6 months later called frantically and was like, I don't want to do this anymore, can I switch to the MSBA program? It was the best decision I've ever made, so I'm so happy. I, kind of like Mikey, wanted to learn more about analytics and use my math major in kind of more of a businessy finance role. And so currently I'm at Wells Fargo in Charlotte. I've been here for about a year now, and I am a risk analytics consultant.
Jake.
My name's Jake Hubbard. I graduated from the MSN program in 2017. Prior to that, I did undergraduate at a small school in Virginia called Hampton-Sydney College, where I was a double major in political science and economics, but was really pre-law. So I went to the MSN program when I realized I wanted to switch into finance and just have sort of more of a dedicated recruitment path, as well as sort of hone some adjacent skills before going to the workforce. I have worked all across the board in my 5 years. So I started out in investment banking in Charlotte at Regions Bank, which is a small regional bank. I then moved to New York to work at more of a Wall Street bank at RBC, doing technology investment banking. I then went to sort of buy-side investments at a large credit fund, doing credit investments. And then now at Bain Capital in a private credit group, I'm the vice president, focused primarily on the consumer, restaurant, and retail sectors. But excited to talk to the students today and hear from them.
And on the sales side, right?
I'm on the buy side, so I've done sell-side investment banking on coverage for M&A. I've done it for leverage finance, which is like debt raising, but now I do private credit. So I'm essentially thinking of me as like a very sophisticated bank lending money for mergers and acquisitions, leverage buyouts, et cetera, that are driven by private equity firms. And we also do some equity type investing as well. We have a fairly large or wide mandate in our group.
Very cool. All right, Gabe.
How's it going, everybody? My name is Gabe Gulb. I went to NYU for undergrad. Sort of ended up at Wake through opportunity to play baseball. I played baseball in undergrad. I played baseball at Wake. I always knew that I wanted to go into finance afterwards, so I was a real estate major at NYU. I had done a summer internship in a real estate credit group at Ares, and then ended up in investment banking afterwards. So I did 1 year of investment banking at Jefferies in Charlotte, and then got an opportunity to work in digital infrastructure. So data centers, essentially is what we're doing at IPI Partners, which is formed as a joint venture between Iconic, which is the Zuckerberg, Jack Dorsey, the tech world CEOs, family office, and Iron Point, which is a real estate private equity firm. So I'm in real estate private equity essentially now, and really enjoying it. But I was in the MSN program at Wake.
Very cool. And what year did you graduate? You graduated in 22?
Yeah, I graduated in 22.
The years went together for me, guys. Like they blur. I know that they were in my class at one point. That's all I know. Matt Ott. Matt's been everybody's an MVP on this call, but Matt lately's been on MVP. He's always showing up to help me educate students on fintech. So tell them all about what you're doing, Matt.
Yeah, so changed a little bit since we last spoke. So my career path has been, I've just recently changed careers from marketing into product management. So still with the same company at Credit Karma, but I started my career at Wake Forest undergrad. I was a psychology major, thought that I wanted to do marketing as the next step with a psych degree. So I went into the MSM program, graduated in 2017. Actually, fun fact, I was on the same team as Jake on the call here, so it's good seeing you, Jake. But yeah, so I pursued marketing. Digital marketing was something that was pretty new. Started getting a lot of analytics skills through that work. Moved different channels, paid search, paid social. Finally landed on SEO, and that's where I learned a lot about web development and managing products on a website. And so that's what led me to be a senior product manager at Credit Karma. So I've been with the company for 3.5 years, going on 4 in April.
He's in Charlotte. All right. So yeah.
I'm in Charlotte as well.
Yeah, in Charlotte. All right. So we're going to stay with Matt, and we'll go backwards and in reverse order. So Matt, tell them a little bit more about Credit Karma, what Credit Karma is, and what they do for consumers, and how the work that you do ties into to that work.
Yeah, so Credit Karma is known as a fintech company. We're owned by Intuit, so we're one of their subsidiaries. We started as providing free credit reports for users. So in the financial space, credit scores are really important to qualify users for different levels of financial products, from credit cards to auto loans to home loans. And so we started as a free credit score company primarily, and have leveraged the data that we have on consumers to provide tailored financial product recommendations based on the user's credit score and their financial information. So we essentially are a data trove of users' financial profiles, and are able to connect them with lenders and issuers from products ranging from home loans, auto insurance, home insurance, pretty much most of the financial products that you would think about. Credit Karma helps users find rates that are the lowest possible for them based on their financial standpoint, and we are primarily paid for leads, essentially. So if a user is on our platform, they're eligible for a specific product and it meets their financial needs, we will recommend it to them. And if they apply, Credit Karma gets paid by the issuer or the financial company itself that issues the product. So we do also have a savings and checking account, which is a fairly new product that we've been offering the past couple of years. So more like the new neobank type space as well. Yeah, it's pretty much Credit Karma. We're digital first, digital only.
Digital, yeah. So if you have the app on your phone and you're in the market for a credit card, Credit Karma's system, right, their back-end system is working on your behalf, doing all that shopping for you, right, like shopping money, right? And so they're going to push different credit card options to you. If you pick one of them, they get paid by the issuer, by the person who's issuing the credit card. Okay, and then for any and everything in between. What product, what are you working on now? Can you tell us a little bit more about your job as a product manager? Because that's a very popular title that a lot of our students are interested in.
Yeah, so I guess a little bit about product management. It's the primary focus is conducting user research and understanding what the consumer's needs are for a particular product, and then identifying a solution. Typically it's technical, working with software engineers, the data analysis team, partnerships, creative, all legal, security, making sure it's okay that we're making something like this. In the finance and fintech especially, there's so much regulatory compliance that we have to. Legal becomes a really tight partnership, and security, if you're dealing with people's finances, you can't risk having a hack or anyone stealing any financial information or data. So right now I'm focused. Intuit recently announced Intuit Assist, which is an automated financial assistant using generative AI. So I'm focused primarily on developing the connection between the financial assistant and our member support function. So how we handle users from interacting with the LLM, which is the large language models, generative AI, to bridge the gap over to support. And so that's primarily what I'm focused on, but also training the model itself with some of our data sets. So just managing relationships between engineers and getting the work done.
Wow, very cool. All right, Gabe, so real estate investments, like dumb it down for us. Like, what do you really do on a day-to-day basis, and how's the work that you do help IPI partners and your clients?
Absolutely. So I guess starting at Jefferies in investment banking, we would advise real estate REITs, real estate investment trusts, and real estate operating companies on mergers and acquisitions, different forms of capital raising, whether that be a recapitalization or raising debt or raising equity. That skill set helped translate into now the buy side of being the person that is acquiring or developing different assets. So effectively, IPI raises a pool of capital from institutional investors. The Wake Forest Endowment Fund, for example, would be an institutional investor. Different pension funds will raise money. So we have raised our latest fund about $4 billion, and out of that pocket of capital, we're able to invest in various real estate and technology-related opportunities, so long as they are, we're hitting our return thresholds and where our risk and return sort of appetite is in line. So essentially, what we're doing is developing data centers for Amazon Web Services, Microsoft, Google, Oracle, the biggest sort of leading technology companies. And as AI and computer learning has taken off, the demand for that space has really grown with it. And so effectively what we do is we take money, we develop giant data centers all across the world, and eventually we'll sell those assets to give the money back to our LPs. We effectively take money from our LPs, invest in and build data centers, and then sell it and give the money back.
Wow. And so data centers, just kind of explain to the audience what a data center is and why. I can understand why it's growing so much, but like how large would a data center be? Would it be like acres and acres and acres?
Yeah, so I think the best way to say it is I'm currently on a project that's about $2.5 billion, and it's 7 buildings across over 200 acres. So it is very, very expansive. They're very large campuses that are designed for, as AI continues to grow and as these cloud providers and computer, so cloud and AI driven people, so Google, Amazon, Microsoft, those large leading technology companies are growing. They need more servers to hold all of their information. All of those servers are housed in data centers. So basically as the internet continues to grow, and as the internet continues to need to continue to grow, data centers need to be able to hold all the storage and all the information.
And does the firm that you work for just do that segment or that sector of real estate acquisition?
Yeah, so I was originally supposed to work for a firm called Apollo. I signed an offer to work for Apollo, and that was in a much broader real estate capacity. And that was across many different asset classes of real estate. IPI focuses solely on digital infrastructure. So that could be data centers, and also we do for fiber, so fiber cables, which you might have heard through AT&T fiber cables, but effectively are transmission lines to transmit power from one area to another. So it is still sort of real assets, like tangible assets, but IPI only focuses on digital infrastructure.
Great sector. All right, Jake, restaurants?
Yeah, so provide some context, similar to Gabe, like Bain Capital is a $175 billion firm, largest private alternative asset manager in the world. We take money from LPs and we invest it and we give it back. So, Gabe focusing on real estate, I'm focused on credit and private credit investing. So essentially, if you think about it, there's probably 3 primary ways a company is financed. You're financed by a bank. So, Bank of America, Ally, Regions gives you money on their balance sheet. that's going to be regulated, it's going to be less risky, and it's going to be cheaper. And then there's going to be liquid credit, which is bought by, we have a division of Bain Capital that does that. It's bought by a lot of different types of investors, but a little bit riskier debt. It's usually arranged, it's sold off by the investment banks, Goldman, et cetera, and purchased by the investors. And it trades liquidly, similarly like a stock, but without an exchange. So it's just traded in between people. And then the third, which I do, is private. So it's all directly originated. And what I mean by that is, I go out and I find the deal, right? And I do the deal versus like an investment bank bringing me the deal typically. So I'm talking to people that are buying companies, right, on a daily basis and trying to be their lender. And ours is sort of the highest risk debt on the spectrum, just our industry, right? Because we're unregulated, we have private capital, we can do interesting things that regulated entities cannot. And so I focus, yes, on sort of consumer broadly. So, if someone is going to, an example of a deal I did at my old firm is Tropical Smoothie Cafe. There's one in Winston-Salem downtown. A private equity firm out of Beverly Hills bought Tropical Smoothie Cafe. So they needed, it's been so long, I don't know how much debt it was, but I think it was probably like $100 million, right? So we sort of, talk with the investor, the person buying the business. We talk to the C-suite, CFO, CEO, try to understand the business. We go through all of their financials. We request all of their company data, customer data, store level data. I know, what's the average ticket price across all your locations? How does every single unit look? I could look up the Tropical Smoothie in Winston-Salem and know the exact performance by month over the past 5 years. So you run all that diligence, right, just to see if it's a good investment, if it makes sense. And then you sort of make the loan and generate the return. And then after making the loan, you sort of obviously monitor the investment, make sure it's okay. So today at Bain, I think one of the more fun restaurants would be, if anyone's ate at Smith & Wollensky Steakhouse, we are the preferred equity investor in that business. So it's not really debt, but we're not actively owning the company either. We're just, kind of getting a higher return as an equity holder, but it's a similar process of just understanding the business, investing in it, and sort of just generating a return over time. But I know that can be very opaque, so happy to double click on anything as needed.
I need some double clicks on that one, but very cool, right? And I can imagine the returns that the firm is getting off of those types of investments, even if they're getting a 1% return on $1 billion. That's a lot of money. And so lots of money being generated there. Nikki, we're going to switch gears a little bit and talk about the program that you're in there at Wells. I know it's rotational, right, in nature?
Yes, so I just graduated from that program.
Happy graduation, yes.
Yes. But I started in a corporate risk rotational program at Wells. And you were in 2 different rotations. So the first 6 months on one team, and then the second 6 months I was on another team. And then post that program, you were placed on one of the teams that you worked with. And so I was specifically within credit risk. So thinking about when a bank lends money, there's the risk of a customer defaulting and not paying back. So trying to measure that risk of credit losses and delinquencies and all the different things that you can measure. So I was specifically on a consumer side of things. So if you think about a bank can lend money to businesses, like we were just talking about, but they also lend money to consumers. So think about your mortgages or if you have a credit card. So my team focuses on cross-consumer view. So we look at all of the different consumer products, and we look to see how consumers are behaving. So this is a really interesting time right now with being post-pandemic and consumers having a lot of stimulus money, so they were able to pay off credit card debt and spend a lot of money. And now with high inflation and just a general economy that has been struggling, the labor market is starting to slow down, we're trying to track the behavior of our consumers to see how where there's more risk or what types of consumers may be struggling.
Very cool. And so who do you support there in the bank? Are you supporting specific product managers, or who's your internal constituency? Who are your stakeholders there?
Yep, so we're a kind of separate group from, there's like the group that kind of does the management of the products, and then we're like a second line behind providing a risk overview. So there's the front line that is supposed to control risk, and then we are the second line to help overview that risk. So yeah, we're a separate entity from the actual product itself.
Awesome. All right, we're going to switch from banking to insurance. Maybe everybody's most favorite topic ever.
Yeah, honestly, just to level set with people, like you're saying, insurance is not known for being cool. Like, no kid, when they're asked what they want to do when they grow up, is going to say, I want to work in insurance. That being said, to sell you on it as someone coming from like a math and data background, data is super integral to the growth and health of insurance companies. It's not going anywhere. There are like so many opportunities that are growing in insurance from data. And then also thinking about a company as big as Liberty Mutual, there are so many different applications of data internally. So like we have a huge investment leg, we have a huge legal leg. There's so many different data science, analytical departments. You're looking at accounting and like a plethora of finance related jobs to do as well, all related to data specifically, not even just getting into those like specific roles. And so kind of similar to Nikki, I'm in a rotation program here at Liberty. We're in the process of phasing out of it right now. And so kind of I've lived in two different parts of the data sphere here at Liberty. The first was more of like finance related projects. So specifically, I was forecasting losses into the future. Most money that insurance companies get ends up being invested because that's where most of the profit comes from. That being said, the company has to keep a certain amount of cash on hand in the form of reserves in case people have claims. And so there are a lot of teams that are kind of working on projecting the amount of money that we have coming in the form of premiums and projecting the amount that we'll have going out in terms of losses. So that could look at anywhere from like the health of the economy to how many hurricanes we expect to get in a season. And so my first couple projects were related to loss forecasting. Shout out to Tanya Balin and her class for forecasting. Did a lot of her stuff. If anybody takes that class in MSBA or knows Dr. Balin, and then my second kind of sphere of projects has been related to digital marketing. And so kind of given the economic environment that we're in right now, insurance companies are not wanting to write a lot of business, and there's been a huge focus on profitability. One of the many levers that we have is how many people we're marketing to and the quality of customer that we're marketing to. And so I've been working on the data science side of things, building models to try and maximize profit based on the different channels that we're marketing through. So, of course there's TV. I've been more on the online, like Google search and stuff like that, trying to use the customer attributes we have to maximize profit. So yeah, that's kind of been my journey at Liberty thus far.
Does anybody know what the Liberty Mutual mascot or the marketing campaign? Can anybody remember what it is? Extra cookie, if anybody gets it right. Yeah, like the commercials that are on. Right, you got the jingle. It's the ostrich, right? And the guy, what's his name? Liberty, right? Isn't it the ostrich and the guy looks like a coach?
Yeah, we've got Limu, Emu, and Doug, and that jingle definitely like haunts me in my nightmares. So
but that's
can't escape it.
That's really interesting, though, of how you work for an insurance company, right? You work in data, okay? He works with the marketing team, right? So there's so much cross-function there. He probably works really closely with the engineering team as well to get the data. So there's just such a breadth of exposure there to all aspects of a business, and one that's really, really large. And so,
yeah,
go ahead.
Just to plug something about Liberty too, real quickly. One of the reasons that I chose to come to the firm was because of the internal mobility. Just like level setting, I wasn't sure where I wanted to end up in the world of data science when I graduated from MSBA. And so coming to a company that has a lot of internal mobility was something that was really appealing for me. So sorry, I didn't mean to interrupt you.
No,
Just
that's good.
slide that in there.
I couldn't have teed that up any better. And So I'm sure Liberty Mutual also appreciates you plugging those opportunities. Are they all in Boston?
So we have a lot of remote workers, and then the other main hubs are in Plano, Texas, Seattle, and then some international locations as well, but mostly in Boston and Seattle.
Okay, good to know. All right. So now we're going to move into Alumni Bank and hear from Taylor and what she's doing with money laundering and fraud and so much interesting stuff there as well. So let's hear it, Taylor.
Yeah, so like I said, I'm part of the Financial Crimes Compliance Group with Ally Bank. So there's multiple aspects of compliance, which are very heavily regulated in the banking sector, like Jake mentioned. So we're one aspect of it. So I work in the governance group, which is kind of like the mitochondria of like the whole Financial Crimes Compliance Group. So we have multiple groups or multiple teams within our group. So we have an investigations group, an enhanced due diligence group, a sanctions group, as well as our analytics and operations team, which a prior MSM grad, Lillian Murphy, also works for. So she's kind of the data science portion of kind of what our broader team does. So within my roles and responsibilities on the governance team, so we work to establish policies and procedures, minimum requirements, minimum expectations. We have business line oversight for all of the products we offer in the deposit space, mortgage, lending, credit card, auto, commercial auto, consumer auto. Most people don't know that Ally actually started, as GMAC. So our commercial and consumer auto business is kind of like our biggest moneymaker. From that perspective, and if you go and you purchase a vehicle, Ally will likely be one of your potential lenders, hopefully a preferred lender from that perspective. So within governance, we kind of have oversight of all those business lines to ensure that all of the requirements that are put in place by our regulators, from like a know your customer perspective, sanction screening, transaction monitoring, all of that, the proper controls are in place to ensure that we are adhering to all of those regulatory requirements. Within our space, we also monitor all of our testing from an internal and external perspective. So that includes our internal compliance testing team, it includes audit, it includes all of our regulators that come in annually to kind of test our full program to ensure that we're doing everything that we're supposed to be doing from that perspective. But at the end of the day, our number one goal within financial crimes compliance is to report suspicious activity. So we are required to adhere to all BSA, AML, and OFAC requirements. So that means that we are reporting any bad actors that are in the bank, anyone who is potentially exhibiting red flags associated with human trafficking, drug trafficking, any sort of money laundering. Ozark on Netflix has actually been like a great thing that has come out, because when people ask what I do, I'm like, okay, so what Marty Bird is doing, like I work in the bank to detect that and report that to law enforcement so that he can't keep doing that and supporting the cartels in Mexico. So that's kind of like a very high level of what we do with financial crimes compliance, but it's needle in a haystack type of stuff. The investigative work is really, really interesting. No day is the same in our group, so that's kind of a high level of what our group does.
So my first question is, how many of these needles do you find in a day? Or do you even find a needle in a day? Is it more like we find one needle in a month?
Yeah. So we're filing SARs every day. So a SAR is a suspicious activity report. So that essentially is filed with our regulators, but that information is shared with law enforcement. So the public-private partnership with us and with law enforcement is tantamount. We actually, our head of our investigations group is ex-FBI, so his intel and his experience has been invaluable to kind of build out our program to be even better than it was before. So I would say, anywhere we're filing 30 SARs a day. Some of it is just because we don't really know what's happening, but we're just trying to work with other banks to ensure that we're getting as much information to law enforcement as necessary. But we also have a proactive monitoring group that works within our AML investigations group that does more targeted reviews. So for instance, one of their recent projects that they worked on was around commercial sex advertising. So what they did is they essentially worked with law enforcement to identify what red flags or what websites that they could be searching for, what transactional patterns of activity that they're finding when it comes to this illicit activity, and they did like data analytics on all of our customers' transactions to identify, what customers are interacting with these websites or what customers are purchasing these ads on these websites that could be potential flags for commercial sex trafficking, commercial sex advertising. So those SAR rates are much higher because it's definitely more like targeted reviews. Otherwise, a lot of our cases that we look at are just like really rich people moving their money really fast between all of their accounts that they have. But like I said, those needle in a haystack type of things, working with law enforcement, and it's always great when we hear back from law enforcement that like, hey, one of the SARs that you filed helped us to get a criminal off the street. So
that was going to be my next question. How much of that comes back to you? Are you able to really see the results of this work to really take down criminals?
Yeah, most of the time it's screaming into the void, but like I said, having those partnerships established with either local or federal law enforcement has been really beneficial because we have been like, hey, we really do want that feedback loop. Like our investigators want to know that like they're not just doing this work and it's going into the abyss and nobody's looking at it. So that's definitely been strengthened in the last year and receiving that feedback loop of the good work that we do and how it impacts in the long run.
Getting the bad guys. Do you need a special certification to do this work?
I don't.
You don't?
And actually, story and how I got into AML, it literally fell into my lap. I went into consulting after the MSM program, and literally just the first project that I was assigned to at a financial consulting firm was an AML-related project. So it's very easy to learn. Having a data background is also really, really helpful if you want to work with like our analytics and ops group, because they kind of work to tweak and modify like any of our transaction monitoring scenarios or work with our proactive monitoring team to pull that data that's associated with the red flags that they're identifying. But really, as long as you're just curious, that's the only background you need to become like an AML investigator and to get involved with this work. Very similar to like our enhanced due diligence team. So our AML investigations group works cases related to transactional activity, whereas our enhanced due diligence group works cases like on the customer themselves. So they're trying to kind of build a profile around the customer and say, well, is this customer, high or very high risk based on, the industry that they're in, or are they a politically exposed person, or are they international? So we also assign different levels of risk to various customers so that we can monitor them better to ensure that, we're keeping track of and aware of the transactions that are occurring to ensure that no illicit activity is coming through the bank.
That's super cool. So AMR, right? Anti-money laundering, and I guess
AML.
Yeah. AML, anti-money laundering. All right. So let's switch gears for just a second. And Jake and Gabe, I think that you both kind of knew finance was where you wanted to be, right? When you set foot on campus here at Wake Forest, you're like, it's finance or bust. I worked with both of them while they were here, and so if I'm wrong, then shout out. But for Nikki and Mikey and Matt and Taylor, they really weren't sure. And so we get a lot of that, right, from our students. Like, I have no idea what I want to do. We have a freshman in the room, in case y'all are wondering. What grade are you guys at? You're a freshman? We have 3 freshmen here. You're a freshman too? 4 freshmen and a sophomore.
That's impressive, y'all. You're like putting in the work early. That's very impressive.
That's just blowing my mind. I'm so excited about that. And so for our MSM and MSBA students as well, they may have majored in something that's not finance. And so talk, if you could, I'm going to start with Matt, give Taylor a break. Matt, like, what are some of the things that you did while you were in school here at Wake Forest that kind of positioned you for that first job? Because his first job was not in fintech, right? It was in digital marketing. So how did the things that you learned, not just including the classroom and outside of the classroom, help you make that first decision? And then at what point, the second part of that question is, at what point did you decide to make a move? And then, Taylor, that's going to come back to you, too, after he's done.
Yeah, so to be completely honest, I had no idea what digital marketing was when I accepted the offer. I just knew it was marketing. I did not realize the extent of the analytics background that you would need to be a digital marketer, and that kind of goes for any marketing channel these days, because the amount of data that is available to marketers to make decisions based on the audiences they want to target or anything of that nature was super important. And so while I was at Wake Forest, the thing that was the most helpful when I was a psych major was a lot of the statistical classes within psych, and I took some statistics classes as electives, but really anything that teaches you how to understand data. I mean, computer science is a super valuable field as well, with a lot of the databases now being SQL or BigQuery, which are just relational databases that you can pull data insights out of and figure out how to find like patterns in the data to inform your decisions. So really my time at Wake Forest, the statistics and the data analysis courses that I took were really valuable. I think communications is something that is extremely important for just being able to function across multiple teams and understanding how to communicate effectively, whether it's written or verbal, or just knowing the stakeholders involved and how to best share information. And so psychology was good in that respect when I was at Wake Forest, just to be able to understand how to interact. Social psychology was a good one. But I mean, I think the best advice that I could give is probably do an internship. That was something that I wasn't as active in when I was in undergrad, but I really started to do that my senior year and into grad school. And I've seen a lot of value with interns coming through Credit Karma, and the exposure that they get and the value that they get to understand, like, not only what it's like to work for a company or a larger corporation, but seeing skill sets in action and knowing that you'll continue to learn after you graduate. So it's not just what you learn while you're in school, but essentially while you're on the job, how you seek information out, how you remain curious and asking individuals for their experiences and understanding, like, how do they get to where they are, as well as like what are some tools and tips, tricks, things that you just wouldn't necessarily learn in any class during the course of an undergrad, but it's something that you have to just be curious is really how I would sum it up, and just ask questions and check out people's LinkedIn profiles. There's some really valuable nuggets there with like certifications and what types of tools and skill sets people develop.
And so when you were in the MSM program, how did you decide on, was it ROI Revolution?
Yes, yeah, good memory, or good recent recall with my LinkedIn profile. ROI was a marketing agency, and so oftentimes if you're interested in marketing, agencies tend to be the easiest route to get into and break into the marketing field. An agency is typically just a company that has a lot of different clients, from small, mid-sized to large businesses, and they'll use their talent in the agency to run the marketing campaigns for those different companies and corporations. And so agencies typically see high turnover, but it's one of the most, it's a really great way to learn, to go to an agency, where you'll pick up a lot of skill sets. There's a lot of on-the-job training, and it gave me a lot of exposure to paid search marketing and paid social marketing. And so after 2 years, I realized that I didn't want to be in an agency, and so I moved to a different company, which I didn't realize was kind of an agency, and so I ended up being at another agency for a year, and then after that was when I made the move in-house to Credit Karma.
Super cool office there in Charlotte too. I've had the pleasure of visiting there, and so it feels very Silicon Valley, if anybody's ever heard about what those company culture and the state, right, just the actual space there is really stimulating and very cool. And so Taylor, so consulting, I think that you were pretty early on deciding consulting. She took a job with one agency, and tell us about that trajectory.
Yeah, so I went into consulting because I didn't know what I wanted to do, and the joke with, all my family members were like, how are you going to get a consulting job when, like, you don't know, like, how are you supposed to be a consultant if you don't know anything yet, type of thing. But it was a great learning experience, kind of similar to what Matt was saying, just being really curious and being willing to, like, be put on any project and just learn as much as you can in that space. So like I said, AML was kind of dropped in my lap. I was on multiple projects with a consulting firm, and this was pre-pandemic, which looks very different post-pandemic like now. So after about a year and 8 months of like road warrior life, which I in undergrad and in graduate school thought was super glamorous. Those credit card points were great, airline miles were great, but I was like, oh my gosh, this is exhausting. I can't do this anymore. So that's kind of when I switched over, thought I wanted to do something different, so I came into the audit world over at Ally. That was actually my first job with Ally, was in the compliance audit group. That was a great experience because once again, it got me exposed to a lot of additional things outside of just the AML space. And if anything, it kind of taught me that that's exactly where I wanted to be. So I came back to the AML space about 4.5 years ago, and that's where I've been ever since. Kind of starting to, establish myself in this space, and I've really enjoyed it so far. It's really interesting. I hope it comes off as really interesting because it definitely feels that way. But from that perspective, I think, it's great that Mikey and Nikki are both on this call because so many of banks or financial institutions do offer these rotational programs. So even if you don't have the opportunity to do an internship, like say, you're working during the summer or you're not able to take a semester off and do it while you're full-time in school and working or whatever it may be, rotational programs are great. And so many companies offer them now, and that is a great way to kind of get your foot in the door and to get exposure to things if you don't know, like, where you want to go in your career. It's always okay to make a career move. It's always okay to pivot and do something completely different if you're not happy and not fulfilled, for sure. So those rotational programs are kind of a great way for you to start your career because you get exposure into a lot of different things. Because when people ask you what you want to do when you grow up, I mean, as you can tell, every person's role on this call, what every person does, would have had no idea that like those roles even existed 10 years ago, when people were asking me what I wanted to do. So just being curious, remaining curious, asking people what they do, whether it's in your company or during conversations with alumni or whatever it may be, because truly there's a job for everything out there. Like you will be shocked when you find out like what people do, and titles don't matter as much as like, well, like, what does your day-to-day look like? Like, what are you doing at work? Like, are you using data? Are you not? Do you work with a data team? Whatever it may be. So just remaining curious and asking the right questions and just following, like, what you're passionate about and what you'd like to pursue.
Awesome. Jake, if you can think back into your time at Wake Forest and why you picked Regions Bank at first, and what were some of the indicators that it was time to move on from the stair step that you've done there to Bain Capital?
Yeah, happy to. I mean, like, Regions was one of the few options that it was kind of hard for me to get. I would say, like, one of the bigger banks offers just how competitive it was, especially in that time period with hot M&A market, financing markets. It was pretty difficult. With that being said, choosing Regions over another regional bank was beneficial to me because it was in Charlotte. I'm from Roanoke, Virginia. Obviously, Wake's in North Carolina. It's a good network. Sort of like the culture of the South, even though I'm in New York now. But it's kind of a better fit than some of the other smaller banks. And I think the interesting thing about Regions is it was sort of like a startup investment bank in a lot of ways, right? It's not fully as developed as a lot of other platforms. And what that means is it gives you the opportunity to wear a lot of different hats and do a lot of different roles at a young age, right out of college. And so my exposure was unparalleled. And I had the opportunity to make really, really strong connections with senior management. I was in Charlotte for a board meeting for a company we owned last week. And I actually went to the Regions office, saw my old group head, saw everybody, all the old coworkers, and it was great. And that's some things that you don't do when you work at like Goldman in New York. Usually you leave very upset. So like I think my time at Regions was great. My learning experience, like I said, was great. So when I knew I had to leave at some point though, because I was kind of hitting a plateau of what I could learn there. I needed to do bigger transactions or different types of transactions, and it was really just time to make a step. And look, I had lived in Virginia, North Carolina my whole life, so there's a personal element of wanting to move to New York and give it a shot, right? While I was in my 20s, and kind of glad I did. But when I went to RBC, I joined sort of a coverage group. So instead of just selling debt, I started focusing on trying to do M&A for only technology companies. And what I realized when I was at RBC is, big banks in investment banking, roles are siloed a lot, right? So you have groups that do one thing. Everyone does one thing. Regions was, we had no idea what we're doing, you're doing everything. And I actually like that approach a little bit better than me just being siloed, so I didn't like that. And then, M&A and coverage of companies is a different sort of desire and skill set. You have to really want to like know your sector well. You want to know the companies, and it could take a year to sort of originate a deal, and it's a monumental transaction for a founder because they're selling their company or they're doing something. And so I'm more of a, this isn't a great phrase maybe, but like a deal junkie. Like I like to look at a lot of deals, a lot of different businesses. I like to, I'm more of a fast-paced kind of guy in that way. And so spending, 8 months on the build-up of trying to do a deal versus, I think in credit, right, there's every day bonds are selling or loans are selling, right? It's just more of a market-driven atmosphere. But I guess the core of your question is, I think every time I've switched my job, it's been a little bit of, how do I get to the next step of my career and what's like my growth trajectory and what do I want to do long term? And so Regions was perfect. In hindsight, I wouldn't trade it for the world, even though it probably doesn't sound like the most name recognition name on Wall Street. But those relationships actually got me my job at RBC. And I realized I didn't like RBC, but some of the people I met at RBC are my best friends socially in New York now. So like that's a whole different element of my life. And then the people I met at Regions actually, after they got me a job at RBC, got me a job at Golub, which was my first buy-side credit job. And then, now I found myself at Bain, where I'm really sort of in more of in the VPC, sort of kind of more of a leadership role and kind of can run my own, J-cover business in a way for our funds and, have my own coverage and be entrepreneurial. So even though I've worked at a bunch of different funds or firms in a small amount of time, I'm very happy with where I am now. And I think all of that switching was beneficial and hopefully will stay here as long as they let me.
Maybe switching isn't the right word. Just like strategic moves. We'll call them strategic moves.
Yeah, like they're all growth oriented, right? I wasn't being like forced out by any means, and it wasn't that I dreaded anything, right? I mean, each place had its own little benefit that has helped my skill set now. Like even though I didn't really like coverage banking, I'm looking at a publicly traded company right now for a debt deal, and I realized like, okay, well, I know how to find all this information, all this stuff from investment banking, where like filings, resources that I would use for a public company that you wouldn't for a private, like that I probably wouldn't have known at Regions, right? And so that gets me up to speed on that stuff in a day. So look, I think everywhere you work, you got to make the best out of it, and I think you should also think long term. Like every position that I've taken has taken a step to get to the long term goal, and so it might seem like a lot of steps, but long flight of stairs. So that's how I look at it.
Good. It's good to hear these stories. It surely is. So we're coming close to 1:30. So Nikki and Mikey and Gabe, this question is for each one of you. Could you just explain as quickly as you can without rushing through it? Why you picked Wells, why you picked Liberty Mutual, and Gabe, why you picked Jefferies originally, and how that process looked for you, because you're the closest, right, to some of these decisions that are being made in the room. So Nikki, we'll start with you. Why did you pick Wells?
Okay. Yeah. I remember when I was applying, I kind of hit a stage in my application process where I was feeling somewhat defeated because a lot of my friends had gotten jobs and I hadn't heard back from anyone yet. So there was one day I just kind of went on LinkedIn and looked up any data related role. Because I had absolutely no clue what I wanted to do. I just know I wanted to do something along the lines with data and business. And so I stumbled across this rotational program, and when I was looking at the program, I was kind of thinking, well, it's a lot of analysis and doing things with data. I had never imagined myself working in risk, and that I guess sector had never even crossed my mind of a place to even think of applying. But I knew that was a rotational program, that if I didn't like what I was doing, I was going to switch jobs in 6 months anyways. So it gave me the opportunity to try a bunch of different things. I ended up really enjoying my first 6-month rotation and decided to not rotate my second 6 months and stay with the team, because I thought that the team that I was placed on my first rotation would be able to help me grow the most. And so I'm very happy that I randomly applied to this job, not even expecting to take it. Yeah.
And you got your job later in the spring, right?
It was still in the fall.
Later in the fall.
Yes.
Okay. And is the bank hiring for for that rotational program currently, or is it frozen as well as a lot of other things?
Yes, so that's another good point, is a lot of places, their entry-level roles are frozen, but for rotational programs, they're still hiring for those, because a lot of times they're funded by different departments. So our applications are currently open.
Yes, I love hearing that. All right, Mikey, why'd you pick Liberty Mutual?
Well, just touching on the personal side of things, kind of like Jake was saying, I knew I wanted to come back to Boston after the MSBA. There are a lot of insurance companies in Boston, so shout out to your market readiness class. I just reached out to a bunch of alum of Wake as well as UMass Lowell, reaching out for opportunities. That actually made me realize that I had no idea what I wanted to do, and thus I started looking at rotation programs, similar to Nikki saying that narrowed down my search even more, and yeah, ultimately landed with Liberty that way.
Gabe, why'd you pick Jeffries?
So like Jake was saying, I was looking at an investment bank, the Goldman, JP Morgan, Morgan Stanley's of the world, but I wanted to be specifically on a real estate team. And a lot of the way that those bulge bracket banks placed where it was applying direct to a generalist program and then being funneled directly from there. Jeffries was a unique opportunity to be directly applying to a real estate group, and also direct banking investment banking was a means to an end for me. It was do 2 years or a year as an analyst and get to private equity as soon as I could. And Jeffries, my group, being able to apply directly to real estate had also placed really well. We had a couple analysts go to Bain, we had a couple analysts go to Blackstone, to Carlyle, so like the really, really big names of the real estate world, and I wanted to be a part of that. Our group actually, sort of all of the managing directors or heads have left the group now, and are now at various groups around the country, but that was an opportunity to apply directly to a real estate group that had a good pipeline and to go alumni network into the private equity firms that I wanted to be at. So that was the obvious choice for me.
Awesome. All right, last question for me, and then if you guys have questions, please chime in. Best advice, very quickly, in 2 or 3 words. We have freshmen, we have sophomores, we have master's students in the room. Like, what's your best advice to think about while they're still in school? Taylor, we'll start with you.
I would just say don't get discouraged. I know that, the application process, like Nikki was saying, it's very overwhelming and it can be, very hard to put your best foot forward every single day. But just, keep the end goal in mind and keep your spirits high. There's going to be a lot more no's than yeses, but you'll end up exactly where you're supposed to be.
Love it. Mikey, what's your advice?
Stay curious and ask questions. Kind of like we're saying about networking, never be afraid to reach out to people and figure out what they do and see if you would like that.
My heart's exploding. Nikki?
I would say be open to opportunities you may have not previously thought of.
Very good advice. Jake, how do they get to Wall Street? How do they get to New York working for one of the largest, coolest,
I was going to say, I think it's great. Like, I agree with definitely be curious, ask a lot of questions, be open to opportunities. I would say if you want to do like investment banking or like Wall Street finance, though, it's important to be focused earlier rather than later. When I look back on my life, if I would have known, like I wanted to do that when I was coming in at Wake, but if I would have known that my freshman or sophomore year, and I've been mentoring kids at that stage of like getting them internships throughout college, like it just would have been a lot easier for me. So. And I think just think about your 5-7 year plan, where you want to be and how you get there, and then focus on it. But that's only for like my side of the sector. It's just more specific.
I don't know if you're familiar, but we have the pre-Wall Street career track now. It's a new program that's completely funded by alumni, and it's for that exact reason. It's just the investment banks are going earlier and earlier and earlier. Are you guys applying? Good. Are you applying?
I'm applying.
Are you in it?
I'm in it.
She's in it. Yes.
It's awesome. I would like to hear about it. Talk to me after. It's the best. It's the best.
So cool. It's really cool. So our team runs that program. So yes, we love it, of course. All right, Gabe.
I would say be proactive and work hard. Be proactive to Jake's point. If you are interested in finance, get involved in clubs. I've actually had a bunch of the pre-Wall Street or the Wake on Wall Street people reach out to me on LinkedIn. And I've spoken with a bunch of them. So be proactive, join clubs, and also work hard. Understand that to get into these roles requires a lot of effort in studying and getting ready for interviews and prep. And also, like, being an analyst is not the easiest of lifestyles. So just keep your head down, work hard, and also know that, we all want to be where there's a light at the end of the tunnel. Work hard and understand how the long-term vision that